All right, Trade Pros, good morning. Welcome to our morning market update for this beautiful Thursday, March 12th. Beautiful, but also bearish Thursday, March the 12th. All right, huge market, and it's very problematic. I think we're at the level now where things get a little bit out of hand, and fear is starting to spread faster than this coronavirus. Big news over the last 24 hours that NBA has put their current season on hold. They've suspended it temporarily, potentially for good. Downside to that is the Raptors were doing pretty good, right? The Raptors need to have a chance at a back-to-back championship. That's a Toronto Raptors team. All right, go Raps. Okay, so other news, S&P 500 and NASDAQ futures fall another 5% overnight, limit down at 2601, along with NASDAQ 7601 half. Dow Jones is down 1,500 points. Gold isn't doing too much better, hanging down near its overnight lows at 1605.90. And so we've long said this, that when markets panic and sell out of assets, the number one most important asset is one that you can't trade. It's cash. And so money is coming out of all assets right now in cash for protection. All right. If you're in a situation where you're experiencing some downside in your portfolio, you have to remember that your portfolio long-term isn't what you should be doing short-term. On the short term, if you have a trading account, fantastic, take advantage of the stuff. For long-term portfolio, I would wait, see when the knife falls and bottoms out, and then it could actually be a good buying opportunity, but we could be months away from that scenario. So be careful. Don't start trading your longer-term assets. You get yourself in trouble that way. Stay the course with those. I have a retirement portfolio as well. I'm not even opening it. I haven't opened it, all right? I know what I own in there. I know it's going to be down. There's no sense. That's my 30-year long game. It's small, all right? Other than that, I have no equity exposure, and I just day trade for cash flow, all right? So let's talk about this. What's caused this downside? The biggest thing, I think, is Donald Trump suspending travel from Europe for 30 days. It's an unprecedented move, all right? And I think it's the right one. I'm going to be 100% honest with you guys. I understand there's a lot of travel for business. A lot of our goods are transported through traveling as well, but there's no reason to be traveling at the moment. Stay home, be safe. The only way to beat this is for all of us to stop doing stuff with each other for 14 days. And I think it's the right move. It sounds crazy. Europe is kind of not happy with it, but why would you allow travel in from a country where it spread so much? Italy itself has banned public events. Only pharmacies and grocery stores are allowed to be open. Hey, Marky, what's up, brother? Oh, you got a coffee too. So why would they allow that travel in there? I'm with Donald Trump on this one 100%. I think travel ban should be done worldwide. Why don't you just stay their ass home, no offense, and let's beat this thing. That's the only way we're going to get over it, all right? In other news, why the market's down. Yesterday, I was telling one of my friends who texted me, should I short equities here, saying, wait a minute, because we're going to see what this stimulus package is all about from the Trump administration, because it was supposed to be gigantic. It disappointed. Payroll tax relief to the end of the year, low interest business loans, and that was it. And some deferred tax payments. So that's great and everything, but that's not going to stop or even help this coronavirus. I think worldwide, these responses are not thinking about the virus spread. They're thinking about the economy. And if the virus continues to spread, you give people $1 trillion. If they're at home, they can only spend so much. All right. So it's extra money. Throwing money at it doesn't make this problem go away, unfortunately. And so, because of that, futures are limit down. Circuit breakers for the rest of the day. As soon as the U.S. market opens, we're going to probably drop a little bit. I was trying to look at the SPY for indication of where we would be pre-market. Let me have a look. My hair is all messed up. It's down 7%. SPY. So when futures reopen, we'll be down another 2% from here off these 2601s. All right. It's just that simple. That's sort of what we're looking at. As soon as we open, we might be back on a level 1 circuit breaker like we did on Monday. The level 1 circuit breaker for the US hours is a 7% drop from the prior day close. That level is 25.46 half. All right. Or another 60 points from here. As soon as we hit that level, circuit breaker for 15 minutes. Level 2 circuit breaker is a 13% drop, which is 2,382 on the ES futures. Level 3 is 20% drop from yesterday's close at 2,190. I hope to God we don't hit that circuit breaker level. that's going to be catastrophic because the market's already down over 20%. We are now officially in a bear market. The bull is over. All right. Based on how we classify and name things, the bull market is done. It's over. The longest lasting bull has tripped a little bit and fallen. Um, Unfortunately, when you give it this name or title, the bull market's over, you're going to pull a lot of traders who are long and investors who are long to come off of those long positions, take some more profit, which means more selling. If they're not going to sell their portfolio, they're going to short just to hedge out their exposure. So if equities keep dropping, they don't keep losing money on their book. Whether you're selling your long or shorting the hedge, you're on the sell side of the ladder today. Right. And so there's going to be, we're going to be hard pressed to see who wants to buy this thing. If there are no bids to the downside, we get a low liquidity moment. This could get ugly. Be very careful. All right. At 8:02 a.m., Fed accepted 50 billion of 82.6 20-day repo bids, which is way oversubscribed. They also said just now, I heard for the 14-day repo is something like 100 billion. I'd have to look at it. All right, we got a lot to talk about, but the 25, 14-day, and overnight repos are all oversubscribed. All right, 8:45 in the morning, the ECB, European Central Bank, launches another round of QE. All right, this is Christine Lagarde, former Mario Draghi head. Now Christine Lagarde's at the helm. All right, this is her first response. She left the deposit rates and the refi rates the same from the month of March. All right, so the rates haven't budged. They didn't cut rates. What they ended up doing is the following. They added some implementations. There's fivefold. I'm not going to go through all of them. There's quite a bit of depth and complexity of these, but they're going to run lower capital ratios during this outbreak of COVID-19, meaning that they're going to allow banks to have less money on reserve so they could lend more, temporarily allowing them to extend. But the banks are the same as us. In times of uncertainty, they don't want to lend as much, right? There's a balance between wanting to lend and the economy, and it's a fine balance indeed. So if everyone says, I don't want to lend money, no matter how much money we give banks, and they don't want to lend it, it's not going to circulate. It's pretty much useless. It's sit in the vault earning nothing. All right. This is what the ECB said. A temporary envelope of additional net asset purchases of 120 billion euro will be added till the end of the year. Additional longer-term financing will be conducted to provide liquidity. All right. The other measure is a temporary net asset purchase of $120 billion until the end of the year. Okay, that's a huge asset purchase level. So they're adding an additional buying stimulus. If they're buying bonds from the market, what are they giving the market? Cash. They're draining out bonds from the system, but providing liquidity in the form of cash. All right, and then they're saying they're going to continue to reinvest principal payments from maturing securities on their book, which means once they dry up, they're going to buy more. So it's a constant kind of stimulation, if you will, or stimulus that's being added into the marketplace. So ECB has done not a rate cut, but they've added an asset purchase program. The question is, will banks be feeling frisky enough to lend that money out, or will it stay on the book and effectively the stimulus is useless? We've seen, I was going to do a video. I had these slides ready and everything. I was going to record it, and the day after it was useless because what I was thinking was going to happen already did. So I don't want to be releasing stuff after the fact, but I was saying these banks can add all the money in the world. They could cut the rates, but if nobody's going to take advantage of that free capital, all right, sometimes even free money isn't used. If people are more incentivized to pay down debt, if they're less incentivized to consume and purchase things, if they clamp down and go into a deleverage mode, no amount of money is going to help. Okay, we're going to need other tools. And so this is where it's going to get interesting. I think, officially in a bear market, it's a little bit scary. I'm going to be honest with you. Not for me. I've lived through these moments, but anyone who started trading, 2010 and onward for the last 10 years, they haven't seen a move like this. And so this is the part where it gets scary. So I'm going to tell you to be safe. Don't do anything irrational. All right. Follow the markets. There's going to be opportunity, especially for day traders. All right. But today, if you're making money, be humble about it because 99% of people aren't in their long-term portfolios. And the last thing I want is you guys to be out there posting your daily returns saying, look how much I made. Ha ha ha. That's not cool. Let's just do what we got to do. We have a job. We got to step on this. We have to make money. It's our job. Don't have any forgiveness. Keep selling the market. Let this thing rip, but just be humble about it. All right. Today's markets, Japan's down 4.4%. Hong Kong's down 3.7%. China down 1.5%. India down 8.2%. Absolute monkey hammering there. In Europe, London's down 5.5%. Paris down 5.5%. Frankfurt down 5.6%. Futures in the U.S., Dow, S&P, NASDAQ, all down 5% and limit down. Dow Jones joins the limit down as well, 22,344. All right. NASDAQ still limit down. So is S&P. None of them have come off of their limit down scenarios because I think we are probably trading near that level 1 circuit breaker already of 25.46. We'll see in a few moments as we get close to the bottom of the hour. All right. In other markets, crude oil is also taking a little bit of beating, down 6%, under $31, now down over the overnight low as well, down below the overnight low from the open. Bitcoin down 13% to 6,700 bucks. You know, I've long said there's going to be a moment where we find out what crypto is all about. Is it a safe haven asset or is it a risk asset? You know, the answer is here. It's a risk asset. It's dropping more than and with equities the same direction. So when times get tough like right now, no offense, but no one's buying crypto. People are going in cash. They're selling crypto to pay for their margin calls and their equities. They're selling gold to pay margin calls on their equity positions. They're selling equities to generate cash. And so we're on a risk off in an aggressive level, and it's happened in a matter of weeks. All right, these kind of things used to take much longer. This is the most severe, quickest downside with the least amount of bear market rallies or recoveries that I've seen in my career. All right, and I've seen a lot of events. And so you're witnessing a historic moment. Fortunately, it's not a good one. This morning also, PPI came out and initial jobless claims. None of that stuff matters. The PPI is actually lower, producer price index, but a lot of this stuff is backward looking too. So, you know, we know that last month in February, things weren't as bad in terms of coronavirus. Now it's getting worse. And so these numbers aren't as important. 10:30, you have natural gas, 1 p.m., 16 billion 30-year note auction, 4:30 money supply, Fed balance sheet. All right. Days like today are the reason TradePro Academy's business model is a low monthly payment. All right. So you guys could learn from the market, be in a community of professional traders. It doesn't cost you an arm and a leg for the education, and you're getting so much more than education. This is what the whole business model has been designed to help you guys do. If you don't know my story, I ain't going to go into it too much here, but I've learned a lot from 08, 09, from seeing people and the damage it's done to them, and I've dedicated literally what I'm doing up till now to helping those people when it happened again. When the market's complacent and bullish and you could buy anywhere and you make money, there's a saying, don't confuse bulls for brains. When you could throw a dart at a board and any letter it hits, you buy that stock symbol and you've made money in the last 6-7 years, that's complacency. We know markets don't work like that, and we're relearning that lesson again. And so, look, just be careful out there, right? Don't do anything rash. Don't get crazy with this. You have a long-term portfolio. Now's not the time to become a day trader, right? But now is a great time to learn how to day trade. You don't need to touch your retirement stuff. Let that be, because you're staying the course with that. It's a longer-term approach. I'm doing that as well. All right. My portfolio for retirement is $25,000. That's all I was able to accumulate in my career working at a bank, which is funny, right? Because that's not a lot of money considering, you know, you invested 6-7 years of your life into that career. So I'm letting that money just sit there. It's $25K. Let it just do its thing. I don't really care about that money. We'll see where it ends up. All right. What else did I have for you? That's it. Join our community, trade with us today. Be safe. I got to flip it over to Steven to talk about oil because we're getting very close to the bottom of the hour here. We started a little bit late. We had some technical difficulties. Thank you guys for being patient with us. But here we are. Cell virus open. All right. All right, guys. Bitcoin is in trouble. Webcoin, I agree with you. And I think that also for Bitcoin, let me give you another 20-second rant. That's it. For Bitcoin, a lot of people who started trading Bitcoin were in a situation where they just bought it and they made $1,000 in seconds. And so now we're finally discovering what a double-sided asset looks like. It could go up and down. And I think a lot of new Bitcoin investors, new investors who started investing because of Bitcoin or trading because of it, are now learning that, hey, I could short and make money as well. And this is the first wave down where Bitcoin sees people who are educated enough to know that they could also short sell it. I think that's what's happening. People that are trading it are saying, hey, I could jump on the short side as well. But it's a very interesting dynamic. Love you guys. Protect yourself. Be careful out there. Nothing crazy. Today's a day of opportunity for day traders. Let's step on it, make some money. Usually on days like today, our room does extremely well. And I'm looking forward to doing that again today. Take care, YouTube. See you tomorrow. Be safe. Love you all. And goodbye. Boxy. Go ahead, sir. I apologize. Took up some of your time, but got excited and I started late. Dangerous combo.